When you look at what we know on Brexit and what we don't know, which is a larger part of the saga, what does it mean for pound levels?
So at this stage, we still remain constructive on sterling on a fairly basic logic. We still think that there is a sizable risk premium, for good reasons, in sterling, and that we will be able to avoid some of the very sterling negative outcomes, including, of course, in the short term, no deal, but perhaps that even the risk of a general election may be slightly overstated in markets. And the other is that the pound is still offering some degree of value. I think it's relatively cheap, and that global investors are still significantly underweight in UK assets. So we think where we stand, probably the upside is still dominant when it comes to sterling. But this week is clearly going to be yet another where the sterling outlook is heavily riven with noise. We will have, I think, in the first instance, this uncertainty about how exactly the EU will deal with a UK extension request, which at this stage seems to be based on fairly little, but simply asking for more time. So we remain sterling constructive, but I think it requires a degree of tolerance for volatility, and maybe this very moment wouldn't be one where I would go to invest.
Okay, what would be the best outcome for markets by Friday? So we have an EU leader summit. Do markets favor a long extension?
Absolutely. I think, of course, in the ideal scenario, we somehow have a breakthrough in the direction of a resolution. So I think a pivot back to May's deal looks unlikely, but perhaps there is a path to a customs union type outcome. But I think the realistic best case scenario for markets is indeed a long extension, so that we can get some breathing room for markets, maybe a little bit for the economy, maybe even for the Bank of England.
That's where I wanted to go right into the Bank of England as well. I mean, one of the most amazing things of my time in London last week was this idea of Mervyn King and Governor Carney not on the same page on no deal as well. What does this mean for the central bank? Expand on that.
So I think that the Bank of England, for the longest time, had been fairly confident about the economic outlook and looking for a window to continue normalizing policy. But it's been held back by two big factors. One is, of course, ongoing Brexit uncertainty, but also now that seems to be slowing the economy down quite sharply. Now, if we have a long enough window, maybe the Bank of England can spring back into action, and we could see them hike again this year. But for the time being, markets are pricing cuts, and that's because everything is going in the other direction for now.